Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
Mike McCormick in the house.
Hey, good snowy morning to you, Thomas.
How's it going?
It's great. Everybody, of course, should be aware that travel is impeded out there this morning.
Right.
It's a lot of heavy snow that came in.
Mm-hmm. There is, yeah. Is it still snowing when you came in?
It is still snowing hard, and, it's wet. And, of course, this is not the first time we've dealt with this, but it's kind of the first time this year that we've dealt with it.
Well, if you remember last February, we had snow up to our eyeballs.
I was here.
All month, and buildings were caving in all over the place. And so hopefully MSU is ready.
I hope so. I bet everybody's out there moving it. But if you've got flexibility in your morning, you might be happier to have a second cup of coffee and let the madness peter out.
That would be true.
Yeah.
Yeah. Well, tell Shane good morning.
Good morning, Shane.
Tom decided to let me in.
Happy morning.
What do you mean I decided to let you in?
Well, you didn't. You left me out. Welcome to the house, Michael. It's great to talk to you. Lots of stuff to talk about.
Indeed.
So, yeah.
Indeed.
So,
shall we begin?
Let's begin. The market up, down, up, down, up, down.
This was the weekend that we were going to start off Monday with a 5 to 10% sell-off.
Yeah.
This was the weekend where the smart money, the bond money, was given signals that, this bubble thing, a little too fast, too hot, and it didn't happen.
Nope.
There was a 2% dip at most. If depending on how you measure things, you could have taken advantage of a 4% dip from where we are today. But your buying opportunity window was extremely limited and not very deep, you might say. The sale that happened was more of just like a pause, and there's real reasons why it happened. There's real reasons why it went away. But for the people that are still waiting for an opportunity to get into the market, it's really clear that this is a bull market. That means that there's just a bias towards prices going up. That means that we can deal with bad news. We can acknowledge it. We can have a sell-off. We can have reallocation. We can have winners. We can have losers. But in essence, if you are risk averse, you're just watching it get away from you.
I was going to say, are we? And I'll get your opinion. I want to get Shane's opinion too. Are we looking at a bottom or near a bottom right now of where the market actually is, and it's going to blast off, or are we at the top and buying now is going to be a loss for us?
Well, that's a nice trap you set for me.
Yeah.
Today is the first day of the rest of your life. I can say that for sure. Beyond that, where are we? Yeah, we're overvalued. Yeah, we're going to someday revert back to the mean, and that's going to happen one of two ways. Earnings are going to come up to where valuations are realistic. Property values in Bozeman, Montana are inflated.
Yep.
At some point, they might be fair again. And that might happen because over time, prices and wages and people's economic situation continue to improve. Or it might happen because there's a big sale happening. We don't see any sales happening right now. I mean, what's been happening is what we thought would happen. It's kind of what we hope would happen, which is the impeachment became a non-issue. The Democratic Party is weaker than they were before they started the impeachment process. I think I think they would acknowledge that maybe if you could get them honestly to do so.
Yeah.
The coronavirus is a global scare that we all have a nerve impulse to that. That's something that really creates a lot of fear in everybody, right? Sickness is a big one, and spreading it and something that we can't control. And the response that we saw and are seeing from international World Health Organizations in China is giving us some level of comfort that, hey, people are taking this seriously. And there's, while it still is a problem, the number of deaths that it's causing are insignificant compared to a lot of the other problems we have. And so that news story is likely to continue to fade as their containment gets better. In terms of stocks, yeah, there's some winners, there's some losers. We got Twitter came out this morning with a growth in users, and that's encouraging. But we're waiting to see how their expenses look, and they're planning on spending a lot of more money. Facebook got taken to the woodshed for peak Facebook. We talked about that a bit last week.
Yep.
But the underlying tone of the earnings is that unless you're in fossil fuels, you made money.
Yeah.
You know,
Probably
that's
right.
pretty much, where they're saying, okay, so, what was too expensive yesterday is now only mildly expensive because it's worth more.
Yeah. So where are we, Shane? Top or bottom?
You're in the middle. And the reason I say that is that I think that the opportunity for your president to be reelected is probably around 80%. That having said that, I think by the end of his second term, the Dow Jones could be at 40,000. There's no question. The stronger he gets, the stronger the market will get. On a global perspective, China's in a deep problem. They have a massive pandemic. You look at the numbers we talked about with the flu just in North America and the danger of it. And while this coronavirus, the CDC thinks it has about a 3% fatality rate. That may climb depending on how it's transmitted. They still don't know. So those numbers are going to be increasingly important because right now the People's Army is in the street of China. The market in the U.S. is only going to get stronger because there's nowhere else to go. There's just nowhere else to go. And as I've said time and time before, these stocks are not overvalued because of their earnings, and they're not overvalued because it's a misnomer to the bull market. They're overvalued because there's not enough of the stock issued on any of these stocks on a global basis for people to buy. So people are forced to buy them at these prices, and they will continue to go up because, if you only have 10 bags of chips in your store and you're down to 8, you're going to double the price on the last 2. I mean, that's just the way it works. And so, overall, I think that the 21st century has changed. Your president has changed the trading routes around the world. And the big concern I have about this pandemic in China is, when do they stop shipping products because of it? Because there's no people, the production of the whole production line starts collapsing. The infrastructure of delivery of food and needs for people, it starts to collapse. Yeah, this is exciting. This is a real exciting time for America. It's going to just, you can't. It's not like you can make more real estate, right? You can't. You could only build so many. I mean, the Hummer is coming back. 1,000 horsepower, 0 to 60 in 3.5 seconds, and it's an electric car. I mean, serious people. Let's talk about this.
So we're going there. From our text line, 478-8298, we always talk about the high cost of living here in Bozeman, but would people rather live in San Francisco? It's filled with crime, drug addiction, alternative lifestyle, and homeless people, and yet the least expensive piece of real estate listed in one parking space in a urine-stained underground parking garage, it's listed for $100,000. Forget affordable housing. What about affordable parking? We are so fortunate to live in Montana. Take the time and smell the coffee. So there you are.
Amen to that.
Amen to that. Well, let me ask you this. I want to ask both of you guys this because here's our situation. As Shane alluded to, China just dumped $75 billion in tariffs. They're getting rid of those to encourage us to keep buying their stuff that they can't produce because nobody's going to be in the factories because they're all going to be sick. So what they're going to do is deplete shelf inventory probably, and Christmas could be sad here.
It's nice to disagree with Shane. I think the smart money should probably be on Shane usually.
Yeah.
So I'm not saying I got all the ammo for my case, but again, I'm calling this coronavirus something that is not going to get any worse. The measures that they're taking. I mean, there's a communist country. They can say everybody wear a mask. Yeah. If you don't wear a mask, you're going to end up in jail.
Yeah.
I mean, it's not,
with the Muslims in the camps.
Right. Here's toothpicks.
But that doesn't stop it spreading.
That's true. It doesn't stop it spreading. Yeah.
I mean, whether they're carrying around posies or what,
Well, the other thing that really throws a monkey wrench into this whole thing, because we got China in trouble.
Somebody should probably tell Bozeman Deaconess that covering your mouth and wearing masks doesn't stop flu from spreading too.
Not a bad idea. We've got China in trouble. Brexit is done. England's gone. Europe, the EU lost one of their most valuable trading partners,
And their stock market's positive for the year.
yeah, and so is this going to make put more pressure on China because it's going to cause a major shift? If we can't get products from China, we got to go to Indonesia, we got to go to Vietnam, we got to go to Malaysia, we got to go to India, whatever.
Again,
so is that going to?
I just don't see it.
Bolster the European market?
I don't see this being I see this being similar to hurricanes knocking out oil production, or sadly, doing a lot of damage in this particular region in terms of the economic long-term impact of this. I don't see it being more significant than that. Now, I could be very, very wrong about that. But I also think that we are expensive in terms of valuations, no matter what metric you use. And I think that might be part of the new economy. That might be part of, Shane's point is that demand is outstripping supply.
Yeah.
And that's not any more complicated than that. There are more people that are wanting to buy stocks than are looking to sell stocks today. And that's why it's going up. And that's true for land. That's true and because people have extra money. And when you have extra money, you're looking for good places to put it. Yeah. And there's not a lot of good places left, and so people are going and adding to the other things that they have. And absolutely, we are going to take this bubble just as silly as it's ever been before it pops. And so I'm not telling people to be cautious. I think this will continue for a period of time. But I do think that if you had to put, the long-term view for me is that there'd probably be a pullback at the end of Trump's second term, not for any political reasons, just because of the way the cycles go, that this will become a really long rally in the tooth. A lot of the things that we're doing are pretty short-term stimulus oriented. We've yet to see the tax revenues come in the way that people had hoped to fill the coffers. So I think that, we're going to have another good rally on another win, and we'll have more deregulation. We'll have more pro-economic policies. But at some point, we're going to hit the wall. Every party ends, and it usually ends with the cops.
Yeah. Well,
I think if I may comment,
please, yes.
I think the trigger for what I'm talking about, and I think you're going to see it this year, before the end of this year, is Netflix, Amazon, Disney, and Google. The first one to split their stock, and it will happen. The others will follow. And the minute that happens, it'll trigger an additional bull market, because then people could get back into it. If Facebook did a split, for example, right now at 10 for 1, it's a $20 stock. Would you buy more, Tom?
Oh yeah.
Of course you would.
Sure.
Google.
Yeah.
Google right now is trading at $1,400. If they split their stock 10 for 1, would you buy it at 70 or $140? Absolutely.
Sure. Yeah.
Netflix. The stock is trading at $369. It split 10 for 1. That's $36. And of course, the world darling, Tesla's at $734. You split that stock 10 for 1, $73. Who wouldn't buy those stocks? Yeah. Everybody'd have a chance to play. So, for me, looking at it as a CEO of those major corporations, whoever jumps and does it first, everyone's going to follow because they have to. They'll if they don't, people will sell their stocks and run to the stock that split. So, this is going to be telling, and that's how the Dow gets to 40,000.
Yeah. Well, I would agree with you on Tesla. I'm not sure I agree on some of the FANG stocks, because the problem that I see, Shane, with that is that one of the reasons companies buy back their stock is that they don't need that money out there not doing anything. They buy their own stock back to expand businesses and open new markets and things like that. I could see Tesla doing that because they need, they're expanding. They're going into all sorts of things. Same with Amazon. I could see them splitting. I don't really see, or Apple, I could see Apple splitting because, they can open new profit centers. I don't see Google so much, and I don't see Facebook as much. Because they could get more people in, but do they really need more people in just buying stock when their advertising is going to be flattened out?
Well, there's principally 5 responsibilities of a CEO of any company. The first one, and most important, is the company is fluid and has money. So funding is always relative. Number two, and they can do that one of two ways. They can borrow or they can issue more stock. The second is promoting the stock. And the bottom line is the buyback of American stocks by American corporations, because it's principally been done on borrowed money, is to satisfy the distribution of their stock and their major shareholders. Because those are the guys that are buying the stock back.
Right.
They're not buying stock back from the little guy. They're buying the stock back from the guy that owns over 3% or even 10 or over 3 and is restricted in being able to really sell it. Or selling.
Selling. All right. We got to take a break here because we're running a little bit behind, but I've got to tell you before we do about the Club Tavern and Grill. Hey, visit Mike, they were voted choice best happy hour.
Club Tavern, where the locals go.
That's right, man. They have happy hour specials every day of the week.
Breakfast, lunch, dinner.
Breakfast, lunch, dinner, and a kid-friendly menu. You can take the kids. There you go.
You could take me. I'm a kid.
I could take you. I've taken you to the Grand Tree before.
My kids are long past the kids' menu, unfortunately.
One of the most enjoyable times I've ever spent with Shane was at the Grand Tree.
Michael, put him in pigtails and everything.
All right.
There you go.
Get the discount ticket at Bridger right after that.
That's right.
Yeah.
Hey, they got happy hour specials every day of the week. You'll love their extensive drink and food menu. They serve breakfast, lunch, and dinner, kid-friendly menu. And if you want to pick up an order or make a reservation for parties of 6 or more, go online to theclubtavernandgrill.com, theclubtavernandgrill.com. Check them out. They're located in the Best Western Grand Tree on North 7th across from Walmart. It's where the locals go. Tell them Tom and Shane and Mike sent you in, and we'll be right back. 35 minutes, 24 minutes after the hour, 35 minutes before the top of the hour. Can't read my clock, Shane. I don't know what's going on.
Thank you. Appreciate the magic button.
Hey, just relax.
I am relaxed. I'm watching it.
I'll get you on. Just take it easy.
You didn't.
You know?
That's not what I said. I thanked you.
Well, you don't have to thank me. You're half the show.
Oh, yeah, right.
Come on. All right. Well, family squabbles.
You've got the power of the buttons, Well,
that's true.
You've got the checkbook, Tom.
That's true.
At the end of the day.
Yeah, we won't be hearing from Mike anymore. All right.
Hey, can I just go into the stock split dialogue a little bit?
Yeah, go for
because
that, yeah.
The contrarian view to this stock split thing is that the new investor is doing index funds or mutual funds and not doing individual shares of companies, in which case the price of the stock is irrelevant.
Yeah.
There's some of this truth, and there's some of the truth of what Shane's talking about, is that there are a lot of people out there, especially more of the traders, that are looking to short and go on margin and things like that, where the price of the stock is material. But for most everybody that's listening to the show right now, if you own 1,000 shares at $100 or you own 2,000 shares at $500, excuse me, at $50, the math is the same.
Right.
Yeah. The tax consequence is the same.
Yeah.
If it goes up by 2%, that's the same. If it goes down by 4%, it's all the same.
Yeah.
And so it is material in the old school of trading. It is material in some of the more advanced areas. But for the long-term investor that's looking for a diversified, automatically rebalanced, low-cost portfolio, you're just along for the ride. You're a Rice Krispie treat in the ocean. And if Twitter splits or doesn't split, there'll be a short-term effect, but I perceive that we're seeing less of an import on that, and so there you go. We'll see how it pans out.
Yeah.
Well, I hate to disagree, but
no, this is good. We're on this.
Go for it. Yeah.
Yeah. Remember mortgage-backed securities? Do we all remember 2008?
Sure.
Okay. The trigger for the next collapse, if there is one, will be index funds or annuities. So anybody that thinks that the index fund is a safe way to go, just remember when the market turns, all those funds start losing value big time. If people start selling those index funds have to sell money to pay those people back. So, this is a great idea and it's a great tool. And I know that the financial tools that are created by all those guys on Wall Street to sell more product are great to look at, folks. But the only thing that's real is a company that'll pay you to own their stock. If a company can pay you a dividend, they're healthy, wealthy, and wise. So if you want insurance and you want safety, buy a cash dividend stock. Look at Berkshire Hathaway. Look at what Buffett did. and follow the road and the path of something that's proven over the last 75 years.
Okay, there you are.
But Berkshire Hathaway was the only person in '08 that had the money. He had $4 billion in cash.
Yeah.
To look at, and he accelerated the growth of Berkshire Hathaway because he walked into 6 banks and made the deal he wanted, not the deal they offered.
No,
him.
they were going to him for sure.
Oh,
With,
yeah.
"Hey, we got a sweetheart for you."
That's right.
One of them was
That's right.
Wells Fargo that didn't pan out so well so far, but
That was.
So your
Wells Fargo.
concern is absolutely valid. It is theoretical at this standpoint. The index funds have not had any issue 08 or any of the shock crashes that we saw on last Christmas Eve or anything. Their redemptions have worked according to plan. But that's not to say that we're not cooking up new financial instruments that we don't understand how they're going to behave in the future. Absolutely. Sure. Yeah. There's a potential there for that.
Mm-hmm. Just to clear up real quick before we have to take a break, stock splits. If you have one stock for $100 and it splits 10 to 1, you have 10 stocks worth $100.
Right.
And shares.
Yeah, and shares.
It's like the Saturday Night Live change.
Yeah, your dollar does. Yeah, you don't make 10 times the money. Yeah, the dollars stay the same, and the number of shares you own.
You own 10 times the shares.
You own 10 times as many shares, but the amount is the same.
At 1/10.
The worth is the same. Yeah.
Wow, the stock market's up a fair bit.
Yeah.
How?
All right. We'll talk about that when we come back. Let's see, guys. We've got to talk about. I want to talk more about how this European Union is going to be affected by China. So we'll be back with more right after this. 25 minutes for the top of the hour. It's Thursday, February 6, 2020, 30 degrees outside. Shane Taubman, half man, half amazing in Vancouver, British Columbia. And we're inundated with snow here. Tommy Gallup, your morning mayor. Mike McCormick, McCormick Financial Services is in the house. And, of course, we're brought to you by the Club Tavern and Grill in the Grand Tree Best Western on 7th Street across from Walmart.
Right there.
Yeah, you got to go. Hey. Let's see. This question is primarily for Shane. Is this still a good time, in your estimation, to invest in Disney? Should I wait for the potential split? What percentage should I keep liquid? What do you think, Mike and Tom's? What do you think, Shane?
Well, I can't advise anybody about what they can or can't do or should or shouldn't do. So I want to premise that. Yeah. I'm only looking at Disney from the standard of two things. Number one, the price.
Yeah.
Number two, the Murdoch family now is the largest shareholder of the company after their sale of 21st Century Fox. You know, they have the largest content of any corporation in the United States, in the universe. They have a library of over 3,000 movies now with that acquisition. And with this whole issue of streaming coming, as I said before, I anticipate they will be past subscribers of Netflix within 18 months. The cash flow of that is nothing but cash. For Netflix to even maintain its position in the streaming world, they're going to have to invest hundreds of, if not billions of dollars to create content, because they'll lose it, because everyone's going to, cut them off with their leased products or leased programming. So that's my view of Disney and why it has an upside, but I can't advise anyone what to do as far as purchasing or not purchasing. I can give you some, view of, why you should look at it, but the rest you have to decide on your own and do your own research.
Yeah. Well, I think from my standpoint, we'll get Mike's opinion in just a second. I think I agree with you, Shane, that streaming and particularly with Disney's ability to create new programming, I think they are a solid company that's going to do well in the future. I think,
they own everything.
Yeah,
They own Star Wars now, which is Marvel. They own so much that where they can go. I mean, Star Wars is going to be around for 100 years,
Yeah.
right?
Well,
You know,
and all their family-oriented things, obviously,
all of it.
is very good for keeping families together and enjoy. It's things that their content, like Frozen or things like that, is enjoyable for adults as well as kids. I mean, they can all sit and watch these things. It's not just kid stuff, but
That's correct.
yeah. So I think I think they have a solid future, and I think obviously they have the ability to create their own original products, and the original products they've created have been very successful. So,
Huge. I mean,
yeah.
when they went into a lot of the things that they've done in the past, where they've spent huge numbers of money, people have always looked at them and said, "Gee, boy, that's you spend $200 million on a production, and you come back with over $1 billion in revenue within a month." It's like, oh well,
there you are.
Yeah.
All right, Mike. We sucked all the oxygen out of the room. What do you think?
I'll just be the fanboy that we can't give individual stock recommendations, but we do like dividend-paying stocks. We do like technology companies. We do like companies that are already successful, that have well-capitalized balance sheets, and something like this would line up with all of those.
Yeah.
It's PE ratios 22, which is higher than the 18 average you'd like to see, but it's nowhere near the stratospherics of a lot of its partners. As you guys both alluded to, they're able to generate revenue right now.
Yeah.
The contrary view, I would say, is at some point new content is in demand, and at some point Star Wars episode 24.5 of the new generation, blah, blah, blah. Somebody needs to come up with a new idea eventually. But for now, they've got the money. They're in the driver's seat. And so I wouldn't have too much concern about. That's one of those stocks. There's a whole basket of them where if you've got any risk tolerance for growth, just so long as you're okay holding it for a while, you'll probably be just fine.
Yeah.
Well, the only thing I can say about movie genre is Bond. The name's James Bond.
Yeah.
So,
there's a new one coming out, right?
Well, there's a new one coming out, but they're also screwing with it by making James Bond a female.
They're still talking about that.
Well, I know that, but there's another one.
Yeah, but they can make a female Bond. I mean, they have in the past, and she's 008 or 09, whatever.
She is. I don't know.
She doesn't have to be 666.
Well, I know the current guy's not James Bond. I mean,
the current guy's been James Bond for like the past 6 movies or something.
It doesn't matter. He's not good.
Because he's not Roger Moore or Sean Connery. He's not James Bond.
Well, no, he's too short. I don't know. Come on. I mean, he's.
You're so wrong.
What do you mean I'm so wrong? What wrong about what?
He's been great, and he's made a fortune for the company.
He is such a loser. My God. Holy
not at the box.
Well,
box office.
I don't know. Lazenby was better than this guy is.
All right, go home and watch your Bonanza, Tom.
Yeah, exactly. Craig has done really well for the genre, and I'm sad to see him go.
He may have done pretty.
Hey, by the way,
Yeah.
props out for the loss we suffered yesterday. The real Spartacus.
Oh,
Kirk Douglas passed away yesterday, 104 years old. Like,
103.
wow.
103. Wow. Yeah. Okay, let's see. Look at Tom's past with Circuit City. Their splits made me money in the long run. My dividend is all you on the air now. Ooh.
Take that to the bank.
Just got lucky to sell Circuit City before it went down. Don't sell yourselves out, please. When I worked at Circuit City, they did $1 billion more than their nearest competitor, and I sent them a sales training idea, which they turned down, and they're gone.
Yeah.
And I'm still here.
Oof.
So, ta-da, another company that I put out of business that I work for. All right. We got to take a break here. Don't go anywhere.
Square Media, watch out.
Hey, this is a quickie. It's only 30 seconds. We'll be right back. 16 minutes for the top of the hour. We are back with Mike McCormick, McCormick Financial Services, Shane Matavin, half man, half amazing. Tom Eagleoff, your morning mayor. From our text line, Mike, it was a tremendous benefit to all investors when Apple split from 180 to 90 And it would be a tremendous benefit again for all investors if Apple did a 4-for-1 split now. Daniel Craig does a great job. Tom, you hater.
Great feedback. I'll do some more research on this
Yeah.
stock split phenomenon.
Yeah, we should talk about it maybe sometime when you're in. And
I guess I should read up if it's a real thing.
Yeah.
I mean, I know when you get added to an index, there's a 7% bump for getting added to an index. There's there's a lot of, as they rearrange the furniture,
right.
There's a lot of valuation dislocations that can happen.
Yeah, well, the reason that you get that bump is that if you become part of the S&P 500, 100, the people that participate in being on the buy side of that have a requirement of stock they have to buy for a new addition to the S&P 500. So it's not it's the index funds and the banks and everything that propagate, the Standard & Poor's.
No, I get it. I get it, Shane. I just don't think there's a lot of investors that are out there saying, "Gosh, I'd love to own a share of Apple, but I'd need them to. I can only buy one share. I've got $45. I don't have $90. Oh, good. Here's my opportunity. I'm going to buy one share of Apple." Like that's. I don't get it. I don't get it.
Yeah, I agree with you 100%. I don't disagree with you at all.
Okay.
It's a very difficult market to make any kind of decision like that. And we're not talking about a janitor from New England, that put in $300 a month for 40 years and came back, dying with $9 million. I mean, he was in the golden age of purchasing stocks because of the prices and what he could afford. But at the end of the day, what we're talking about is how people perceive the market. And that's why, a great story we could talk about is the day traders that got dumped on it, in the dot-com collapse back, 23 years ago, 98 to 2001. And how that came about, and there's been times in the market that have created that opportunity because a lot of people are looking at price value for the reason to buy, and I just agree with you that shouldn't be a reason.
Yeah. Mike, I happen to love Old Western. What's wrong with Bonanza?
Oh, I watched tons of Bonanza.
Research Coca-Cola, McDonald's, and IBM is one of the questions. So maybe we could do that next week. We could go through some of the famous stock splits and how they affected the markets or something. Maybe.
But out of that basket of stocks, McDonald's, Coca-Cola, IBM, I mean, there's some of the stocks that made people the most amount of money of all stocks.
Oh, yeah.
And their futures are all very much in doubt.
I know. Yeah, that's true.
All very much in doubt. They keep trucking on. Don't tell me, I'm not forecasting anything, but there's nothing new and shiny about any of them.
From our text line 478-8298, Daniel Craig looks like Putin, and I would agree. He does. He looks like a Putin with hair.
That might be a compliment. Does he parade around with his shirt
both
off?
Short, so they also have that in common. They're both short.
Yeah, they're both short. That's what I mean. James Bond is, he can't be a short guy and beat people up and, be licensed to kill if you're short. What is he, Napoleon? Come on.
The camera does not make you look short.
Well,
Arnold Schwarzenegger is 5'10". Sylvester Stallone is 5'9". So come on.
Yeah, Tom Cruise I think is 5'7", and
exactly.
I don't know what was it? When we took a tour of Universal Studio, when they showed us the Western towns, they made the doorway shorter so the heroes would look taller coming out of the doors.
And by the way, Mini Mike is 5'6", so he's like half of.
Well, I think if anybody remembers Alan Ladd from Shane, I think he had to stand on a box to kiss the girl.
I wonder if there's a correlation to that, right?
I don't know. Short guys are
better actors.
Better actors? That may be. I don't know. But anyway, we got to take a break and think about this.
Yeah, we got to regroup.
I don't know. This Daniel Craig fan club here is making me question the intelligence of our listeners.
Whoa! I'm happy to fall into that group.
I am a hater, man. I am a hater. Mike McCormick's in the house. McCormick Financial Advisors. We'll be right back right after this. 9 minutes for the top of the hour. It's Thursday, February 6, 2020, 31 degrees outside. Boy, I'm getting some hate. Keep it up, and I'm going to start calling you Tom Pelosi.
Okay, I just want to make a real quick observation.
Go for that.
The Academy Awards are on Sunday. Of course, they destroyed their brand, so I could be wrong.
Yeah.
But the biggest nominee this year is Netflix. When we talk about streaming, this is intentional on the part of Hollywood to recognize Netflix on Sunday. I think they may take home more Oscars in a single night, possibly, than anyone ever has. The biggest movie, I think, was not Spartacus. Yeah, I think it was Spartacus. Took home 12 Academy Awards, speaking of Kirk Douglas. And I think if that happens, I'm just saying the potential is you could see a price increase on the price of Netflix next week. But the one thing I'm looking at for the Academy Awards, and the only reason I'm watching it, to see how many golden Oscars that Netflix ends up with, because Hollywood will be out to try to save them. They have no content, and every contract they have to show content they have right now dies, and no one's renewing them because they want that content for their own streaming. So this is a big time, folks. There's a great opportunity here in the next 3-4 years because of streaming.
From our text line, 478-8298, Audie Murphy was a real and a TV hero. He was short. Yeah, he was the most decorated World War II veteran in history, certainly. Among the media and streaming giants you mentioned, which ones currently have the most favorable PEC ratios and the best valuations? So...
Well, this is a trap right here because Comcast is probably going to win out on that one.
Exactly.
Yeah. And that the outlook for Comcast is dim because a big portion of their revenue is coming from the cables that we cut. And I got to tell you, I brought my cable box in a couple weeks ago, said I'm cutting the cord, and the people looked like I was the umpteenth person. There was no hey, but what about this toaster?
Steak knives.
Right. How much can you afford?
Right,
what do you want your payment to be? Sort of dialogue. It was like, okay, here, we'll take it back.
There you go. Yeah.
We're not going to fight that.
I'm $7.50 an hour. I don't care.
And all three of us gave everybody fair warning on this over a year ago. A year ago, we gave everyone fair warning.
Yeah. Yeah, we have a lot of people that are cutting the cord. That's for sure. So it's
cable companies are buggy whip companies of the 21st century. They're in serious trouble.
Yeah, and I don't see.
And yet we're determined to put fiber optic, to every person in the state right now.
Well, that'll be for internet though, more for.
But 5G is supposed to be.
Well, Wi-Fi will make it, make that obsolete. You're absolutely right, Mike.
Yeah, you're right. Yeah. So, okay. We'll have
660,000 5G or Wi-Fi orbs are being put up across your country, and it will take 4 years just to physically do it. Yeah. They're only half the way through the manufacturing of them.
Yeah, they're going to put one above my clock here, I think.
We'll have really good connection here.
Yes, we will. Good news, Shane. Tomorrow I'm going to send you all the stuff.
Yeah, exactly. Yeah. There you go. My new box.
Yeah.
My talking box.
It's got everything in it, man. It's got all kinds of wires and stuff, and you'll love it.
Okay.
It can't be. I'm going to send Shane a.
Macy's to close 125 stores.
Yeah, maybe this one. Maybe this one.
The mall is still dying.
Yeah.
I mean, it's
malls are gone, man.
That is actually progressing faster than the whole cable concept. That one is happening right now.
Yeah,
and that's because box stores are collapsing, and so they're losing their anchors in the mall, and as we all know, it's open real estate to build something on, though, buddy.
It is, and it'll be interesting to see where it goes because people need community gathering places. They need something to do. They like to shop. I mean, there's going to be something that occupies it.
Yeah, where are the kids going to? A library?
Well, more importantly, older people that go to malls when it's hot for air conditioning or
right now there's a bunch of people walk in the mall right now.
That's what I say, to exercise. Yeah,
they should be streaming us over the loudspeaker at the mall right now.
Yeah. Oh, I did that for years. I did mall walking every morning before work when I was working. Yeah. Yeah.
We'll see what it becomes, but people that are invested in those they'd be doing it through a Simon Property Group or a real estate investment trust. And those companies are aware of the trends. They're aware of these things happening. They're looking for good deals and ways to get around it. maybe we'll see, office complexes going into malls. Maybe there'll be new development like that. I don't know.
Yeah, it's hard to tell because every Christmas the online buying becomes more and more prevalent.
More and more, and so we end up with the old Gibsons. That would be our poster child for something that didn't work, right?
Sure, yeah.
And how will our Gallatin Valley Mall hold up during those things? We'll see.
Yeah.
Well, I think you'll see a massive in the next 20 to 25 years. You'll see office towers, particularly downtown, turn into condos or apartment buildings because so many people will be working home.
Yeah, well,
they'll
we're
be
seeing
working
that in
from
Bozeman
home
right now.
yeah.
You got it, Shane. I mean, they're building. We got cranes in the sky like crazy here, and it's all residential. They're not putting up
Exactly.
office.
Yeah, they're not. Yeah. We still have low power 911 lines in the ground. Well, maybe not for long. But the 5G.
It is nice that when your power goes out, your phone still works. That's
true.
That's a neat game.
That is.
That's of course if you had a landline, which we just cut.
Yeah. Yeah, you're out of luck. So let's go to the phones. 522 Talk is the number. Caller, you're on the air with Mike McCormick, Tom and Shane. What's up?
Morning, fellas. This is Bill.
Morning, Bill.
Hey, so I don't know if you guys have been to any malls while you're out traveling recently, but it's been my experience over the last year. I've hit a couple of malls, one up in Calgary, one over in Portland. I think we're just doing something wrong with our malls here locally because the malls that I've been to are thriving. In midweek, they're jam-packed with brand new stores. The stores are absolutely gorgeous. I don't disagree that malls are going away, but man, there are some people that are doing it well.
Yeah, you've got what's the big one in Minneapolis somewhere?
At the Mall of America.
Mall of America.
Mall of
Yeah,
America.
isn't that one? Isn't that one a pretty
Owned
good
by a
size?
Canadian family.
Yeah.
Yeah, we spent some time up in Calgary, well, a couple of times last year, and their mall is 3 stories tall. There's an indoor arboretum. The place is packed.
Yeah. Well, I think if there's a reason to go there, it might be food, it might be restaurants, it might be all sorts of things that draw people.
Yeah, I mean, they're able to get us to go to now we go to the brew pub instead of going to the bar.
Right.
So maybe it's just they need to reinvent themselves and take some cues from the successful ones as opposed to the same old Muzak and department store endless walking around thing.
Yeah.
I say I'm not so.
Yep. Shane lost us. That's okay. Go ahead. Nope, I guess not. All right.
Everybody's gone.
All
Careful
right.
out there. A lot
All
of snow.